Hello everybody, it's me the Boss Hog, and today we're going to be looking at my buys, sells and dividends over the last week as part of my stock market portfolio. Currently stands at 90,000. Let's do it. Okay, so actually mostly a fairly good week. I do appreciate that, especially on Tuesday. I think it was quite difficult for a number of people, but I was supported by the fact that a activist investor took an 8% share and basically said publicly that they believe that Huntsman Corporation was significantly undervalued, which I agree. It looks a little bit better now at the near $31 that it's climbing to. I had a $32 price target a fair few months ago now. I will be fairly urgently reviewing and seeing what my approach is going to be as it gets close to that, to see whether I'm going to take some value or whether I think actually it should be even higher still. I would point out that at $32, I'm on the fairly low end of analyst estimate ranges. I think they go all the way up to about 48. So again, I may well just be behind the times, and I really admire. I like the company a lot. There's a reason why it's over 15% of my portfolio. So that's exciting. And also as well, National Express, where I have been beaten up, and I kept adding shares to it because again, I think it's just a really undervalued share. I mean, even more so than Huntsman was. I think National Express is maybe 50% undervalued. It's pretty bonkers. I just think it's fundamentally misunderstood as a COVID stock. That's all anyone seems to think, and they're not really looking at the numbers properly. It was in the news because it leaked that they were considering buying a large bus company. To be honest with you, I'm not completely convinced that they should be doing that. I think it's a very large acquisition for a company of their size, and I would much rather that they spend 10 million here and there buying up much smaller distressed companies rather than this one. There are some pluses to it. It would definitely slingshot their UK coach business and everything else because they can use Stagecoach's very extensive infrastructure. But again, I'm kind of on the fence, so we'll see how that goes. So I mean, it doesn't really change anything for me in terms of National Express's business model or the way it's going, and I think all it really did was it encouraged people to maybe run numbers again on National Express, and that again, it went up like 15% in a week. Has had a slight pullback, but it's basically I had been down like 1,400 quid on National Express. I'm now down only about 200, so that's basically a plus £1,200 swing over the last couple of weeks, so that's helped as well. All that aside, oh yeah, and by the way, those two companies, they are 1/4 of my portfolio. So my top two largest companies seen significant movements over the last couple of weeks. That's really underpinned my performance against the S&P and the FTSE. I'm not necessarily. I made a couple of mistakes this week in terms of my buys. One of them, especially, is really amateur schoolboy error, and one of them I attempted to do some swing trading because I thought I understood a company, and then when I saw the results, I ran away super quickly. Somehow I managed to make a very small profit on that swing trade all the same, but I definitely misjudged the company. I'll touch on the specifics in just a second. So yeah, not my finest moment. We are now adding back £800 capital a week. I did stop for a couple of weeks. That was mainly because I filled up one of our investment accounts, and my wife was away, who had all the banking information, so I couldn't do anything about it. I am actually considering though increasing that. I already spoke to my missus about it because this would be above what we'd already agreed to put into investments. I just think there's a few tech and growth opportunities at the moment following the last couple of weeks. For me, it's specifically Games Workshop at the moment, a very fine UK listed FTSE 250 company, the owner of Warhammer. It's having a 20% pullback for no obvious reason as far as I can see, and I would like to throw some money at it now that it's under £100. So I actually expect the next week I'm going to bring forward some of that investment and start buying some Warhammer. Games Workshop specifically, so but we'll see how that goes. And a good dividend week, reinvested. As a reminder for anyone who hasn't seen this, or indeed a reminder if you have, my strategy with dividends is to funnel them into two dedicated companies. So in my personal ISA investment account, it goes into Lockheed Martin, LMT, and in my wife's investment account, it goes into Johnson & Johnson, so J&J. My thinking here is it's really satisfying for me to actually see my position in those companies building over time through no capital acquisition contribution at all. And secondly, I believe that these companies are going to be around forever. So in the future, as they've kind of yield on cost and compounding over decades, I'll have material holdings in these companies that will basically be free money on free money. So that's my approach there as well. So that was all good. Anyway, let's look at my buys next and see where I messed up. All right, so a pretty long list here. The yellows are the ones I want to highlight and talk about, but any questions about any of the ones that aren't highlighted, drop me a comment. I will do my best to reply and give some rationale as well. So I'm going to start with Gamma. This is now a top 5 holding for me, a UK telecom that I think is extremely quality in terms of the company. It published some results and dived, and I've been averaging down because I did a little bit of knife catching. It did sort of stabilize on a 1-day 15% drop, and I was like, result, because I got in perfect, and then it went down another 10%. So anyway, I'm really pleased to be buying another 100 shares at 18.5 quid. For me, I believe the company's worth about £23 a share, so not a huge premium, but again, I'm perfectly okay to take any kind of discount really on such a good company. I work in telecoms. I've worked actually with Gamma, though never employed by them beforehand, and I really like what I see. I think I have a relatively good understanding of the company, and yeah, really pleased to own it. So although it looks pretty red at the moment, I have no doubt that in the future I will have a good position there. Next up is where I made a mistake. It was weirdly humbling. I've actually owned JD Weatherspoons beforehand. If you're a UK investor, you'll know Weatherspoons. Sorry, UK citizen, resident, you'll know Weatherspoons. The pubs are everywhere. CEO is very colourful, to put it mildly. It's basically cheap and cheerful food. And I did own it in the past, where I was buying at like 11 and sold it almost perfectly at the peak at like 13.95, and then it's had a pullback. And my thinking here was, it's actually now £10.5. Its competitors published relatively solid results, and I thought, well, even if they just match those results, it's pretty underpriced at 10.5 quid, right? That should be like a 13.50 kind of equivalent. Anyway, when I saw the results, I was pretty horrified. I mean, they're dreadful financials, and really, I didn't give enough consideration, I think, to the type of pubs that Weatherspoons have. They're all in cities. The business model is basically, ram them in and standing room and, etc. They don't have, the ability really to social distance. Pub gardens aren't a thing, right? They're not the same business model as all of the other, big pub companies in the UK. And they're basically struggling at the moment, to be honest with you. So I've never really viewed Weatherspoons as an investment, because pubs in the UK, it's a really competitive sector. It doesn't produce enough money to get me really interested as a long-term investor. But I was quite happy to trade it. And yeah, I got it wrong basically. I thought I knew the company better than I did. The one thing I will say is that somehow I managed to make about 20 quid on it. And I just ran. Even if I'd have lost a few quid, I would have ran. It was a mistake. So I was actually quite lucky to make any money off of it at all. But that was funny, in a way. This next one is actually a new position. It's a company I've known about for a while. I had a price alert at 3.90 where it fell below. I decided that was enough for me to open a position. It's a kind of, my brokerage classes it as a tech company. I've actually grouped it into healthcare, but it kind of straddles the insurance, tech, and healthcare world. I'm not super familiar with this company yet. It was kind of a bit opportunistic. I wanted to get it while it was below 3.90. So I do need to do a little bit more research into this. But I checked the financials quickly. Again, it seems like a quality company. So I might add a bit more as and when I'm able to. So, but yeah, I personally need to do a bit more digging into this one as well. Everaz is a company I know super well. I think it was actually the first stock I'd purchased since I got into investing. I've also done a video why I think it's better than Rio Tinto, which is a much better iron ore play. You'll see why I believe that's an iron ore play, not a generalist miner, if you watch that video. But Everaz here, I was happy to basically buy at my current price and build my stake from there. Games Workshop, I've touched on this already, right? So I'm rebuilding my stake. I'm up to 6.5 shares, I believe, and we're going from there. I'm sitting on quite a lot of profit from previous realised positions on Games Workshop, and again, it's a company I feel like I know very well. So hopefully, I won't have the same shock that I had with Weatherspoons. So Merck is the other kind of schoolboy error. I got a bit confused. I can't think what else happened. Basically, I put some money in and I was trying to buy BMY stocks and average down. And in my head, I had like AbbVie, right? And I was like, no, it's not AbbVie, it's Merck. And then I just bought Merck, and I was like, hang on a sec, that's not what I meant to do at all. So I sold it immediately. I have actually owned Merck before, and bought it in at like 72 and sold it at 78. I kind of wish I'd just stuck with the 5 shares I did buy, because obviously they just went up 10% on the COVID drug news, but this is fine. I sort of, again, I think one of the good things that I've been able to do since I've been investing is just cut my losses very quickly, right? Like, especially in the early days, I exited a bunch of positions at small losses, and almost all of them turned out to be the right decision, because the shares just went south. A lot of the recovery stocks, etc. So I'm not shy. I made a mistake. It wasn't the company I meant to buy, and so I just sold out. So it cost me like £2.5 in kind of transactional and FX conversion fees, but fine, whatever. But definitely a schoolboy error. And last but not least, actually, is Darktrace. So this is a newly listed company, only about 6 months ago. Since it's listed in the UK, it's gone up like doubled, more than doubled in price. It had a bit of a pullback on kind of results that were in line with expectations. This is kind of a cyber meets AI kind of company, right? Cyber defense. Again, it's not a company I know tons about, but I kind of am knowledgeable enough to know that these kind of companies are needed and necessary at the moment. I've opened a very small position and I'm averaging into it very slowly. That's kind of a lack of knowledge on the company and the sector. But everything I read and hear is that, again, it's a good company, probably fairly priced at the moment. It might even be slightly overpriced, but got a little bit ahead of itself. And then when it published just solid results, it just wasn't good enough. So for me, I'm going to go into this one nice and slowly. And yeah, I just wanted to call that out as well. So these are all my buy lists this week. A pretty long list, is what it is, right? But let's have a look at the sales now as well, which is a much shorter list, by the way. All right, so I wanted to address TEP, Telecom Plus, which is a company I mentioned over the last couple of weeks because it's kind of been on my radar. It ran up like 20%, having been, in my opinion, significantly undervalued, maybe by as much as 40%. And I more or less decided to profit take whilst it had run up. I was only about 4% up, so hardly a great return. And I still think even when I sold it, I was maybe, it's probably 10% undervalued. But I decided to sell it anyway. Two reasons for this. First of all, I now have a very large position in Gamma, and I only really need one UK telco. My reasons for owning Telecom Plus was more of a value play, right? It was just cheap, so I wanted to buy it. Whereas Gamma is kind of one of those companies I want to own for many years as kind of a core quality company. So I just slightly prefer it as a kind of long-term perspective. And secondly, Telecom Plus has benefited by being seen as one of the key winners from the gas challenges that the UK is having at the moment. A lot of the gas providers in the UK hitting the wall and basically going bankrupt. And the regulator is having to take the customers all with that business and basically auction the customers to other providers. And Telecom Plus, which is a very conservatively and actually fairly well-run utility company, more or less said, like, we're just not interested at these kind of prices. So although they might be a long-term winner from kind of the weaker or maybe more aggressive companies going out of business, it became obvious to me that they're not suddenly going to acquire 500,000 customers from a defunct third party. So again, I was just like, you know what, I'm now up. I want to go elsewhere, and so that was my decision there, to be honest with you. Vistra here is also actually a value play for me, overly punished in my opinion from some weather-related issues a few months ago. Did have to take on debt, but the reaction from the share price is just a disconnect. Hasn't really moved too much, to be perfectly honest with you, and I think it should do. Again, I mean, I sold here for like 5%, and I held after the ex-divi date, so the dividend actually arrived today on the 1st of October. But I just decided to redeploy not insignificant amount of shares into Gamma, Bristol Myers, and Genius. The last one here is a tech company that's more and more speculative, but I've been swing trading now for this round 3. And again, I feel like under $19, it's a good entry point. Bristol Myers under 60 is ridiculous, so let's buy that. And Gamma, I think I've already touched on, so that's the rationale there. Weatherspoons, I won't. £30 profit on this, which I guess is probably about 6 meals and a beer at Weatherspoons, so there's that. I also just wanted to address CACI. I'll try and use the wording that they use rather than calling them khaki. I'm really bullish on this. It's actually held up surprisingly well despite the tech sell-off and the growth. It doesn't pay a dividend. It has no intentions to ever pay a dividend. This is basically a defense meets IT contractor. I just think it's flying under the radar. Like, everyone's like meme stocking Palantir and those kind of companies, right? Look at khaki. sorry, CACI. It's really well run. It constantly wins like tens of $1 million worth contracts, and although they are expecting a couple of percent organic retreat, I guess, from Afghanistan pullout. They are, looking to redeploy their intelligent involvement in that arena, to the Middle East and Africa, basically. So we'll see what that looks like. That they advised on a 2% organic loss, but overall, from everything growing elsewhere, still a solid company. And I'm kind of using it in my wife's ISA as almost like a store of value. I just don't think you can go wrong with CACI, basically. But what I decided to do here, and why I decided to sell sort of 2/3 of a share, is I've mentioned it once or twice before, but I hate owning fractional shares, right? Like I always have one or two in my portfolio that, like 8 digits long, just a pain. So when I get to the stage where I'm actually reasonably happy with my share size holding, I always look to just round down. I did something very similar with Huntington actually as well, which is also on that list. I really like Huntington. I speak about it a lot. But again, it was like I had like 153.1554 shares, so I just trimmed and put into Genie as well. So there's also that as well, but it's very small. So yeah, fairly active week, honestly. Just decided to make some tweaks, especially on my utility stocks that had small returns, and move them into slightly more long-term plays. I think that's the way I would phrase it. And likewise, everything else kind of went relatively smoothly, but it was quite exciting. Like, I haven't really had any of my holdings beforehand be involved in takeovers or activist interest. So this is, I've only been investing for 10 months, so this is quite new and exciting. And obviously when the news of Huntsman broke and I was like watching, pre-market rates, I was getting very excited. And when it opened, just to it was like £1,000 profit, right? Just on top of what was already there. And it's also been edging up since as well. So that was really beautiful and honestly very exciting. That was just very exciting. I can't explain it any other way. So much longer than I was originally planning. Hopefully, I think I went into a bit more detail. So hopefully that was useful. I don't have anything else to add, but as ever, like, subscribe, and ask any questions that I didn't get to. Otherwise, I've been the Boss Hog. Thank you very much for watching, and good luck with your investing. Bye for now.